Ladies and gentlemen, let me read you this from Time magazine. The Biden administration took a new stance on crypto. Here's what investors should know. It's a little while back, but it is going to be very important from here on out. The Biden administration is looking to crack down on tax evasion and pointing to cryptocurrency as a big area of concern. The U.S. Treasury last week announced proposed changes to cryptocurrency reporting as part of President Joe Biden's proposal. The plan would implement a new rule for businesses and crypto exchanges requiring them to report any cryptocurrency transaction with a fair market value of $10,000 or more to the IRS. That's the same amount currently required for cash deposits. If you deposit more than $10,000 in your checking account, for example, your bank is required to report that to the federal government. The report says cryptocurrency, quote, poses a significant detection problem by facilitating illegal activity, broadly including tax evasion. So they're going to crack down on digital currencies. Hit subscribe to this channel right now. Tell your friends about this channel. To my super chat, I cannot do this without you, ladies and gentlemen. So your super chat is greatly appreciated. Eric H526, Luke St. Martin, thank you very much for being amazing moderators. To my super chat, thank you. Ladies and gentlemen, we're heading towards a financial collapse, or I should say a stock market collapse. A stock market crash. You look at every economic indicator. GDP has been revised downward. This is not necessarily an economic indicator in an aggregate sense. Maybe it is. Margin debt is at an all-time high in the stock market. Okay? Margin debt as a percentage of GDP is at the same type of levels that existed right before a market crash. Consumer confidence is low. The producer price index is at its highest point in over a decade. The consumer price index is at its highest point in over a decade. Inflation is well over 5% and growing. We had the greatest jobs miss in history. Analysts said that 700,000 more jobs were supposed to be were supposed to have taken place. So you have a situation, ladies and gentlemen, where there are other issues as well. Hedge funds have not told the United States government how much leverage they truly have. So the interesting thing about the regulators, the interesting thing about the SEC and the Federal Reserve and other regulating bodies is that they demand to know how much debt. They demand to know how much debt hedge funds have or banks have. The problem with Archegos, the hedge fund that collapsed, is the following. If you look at any of the reports from the Federal Reserve, New York Fed, SEC, and you want to find out how much leverage and debt these banks are exposed to. Okay, their risk exposure. You're not going to get an accurate number, and here's why. The hedge funds can actually hide the debt that they have. The hedge funds can actually hide the debt they have doing the following. Without owning the underlying stock, they can purchase contracts on the volatility of the price. So, for example, the hedge fund Archegos had contract for differences, these derivatives contracts, with Credit Suisse and other banks. To give you an example of the type of racket this is, the banks loaned them money. So check this out. The banks loaned them money to purchase, the banks loaned them money to utilize in order to buy these contracts on margin, which is the loan that a brokerage firm gives you so you could buy stock. So if you buy $10,000 of stock with cash that you have, you can actually buy double the amount from a loan given to you by the brokerage firm called margin. So if you just put, 100, you could buy 200, or no, 10,000, you could buy 20,000 because you have to put a certain amount in. So 10,000 cash that you put in allows you to buy 10,000 more dollars in stock on margin, which is a loan. Same thing happens to hedge funds. Guess who gives them the money? The banks, and the banks have investment and brokerage firms that they run, which they shouldn't because Glass-Steagall should be reinstated. So check this out, and hit subscribe to this channel. Check this out, ladies and gentlemen. The Guardian, banks such as Nomura and Credit Suisse offer broker services to clients such as Archegos, the hedge fund that went bankrupt, lending them money to buy shares and other assets while also processing their trades. So check it out. Tell your friends about this channel, ladies and gentlemen. Tell your friends about the impending stock market collapse that H.A. Goodman is telling you about. I'm not right about everything, but I told you that Clinton would lose to Trump. I told you that Trump-Russia was complete hoax and fabricated nonsense. I told you a whole bunch of things. I said Amy Coney Barrett would be the next Supreme Court justice long before she was even considered. A lot of the things I've been saying, sometimes I go way out on a limb. I'm not right about everything, but most of the time, I'm on point. You can compare my analysis and evaluation of things to anyone, like definitely in the mainstream, and also the $20 million venture capital funded socialists, social democrats, whatever, who are facing a discrimination case. Anyway, it's a racket where the banks loan money to hedge funds for risky investments. Then when they can't pay back their risky investments, they get a margin call. You and I would get a margin call just like a hedge fund with $150 billion in assets. We would get the same margin call. In fact, I think it was Credit Suisse or JP Morgan, they're actually getting numerous margin calls throughout the day now, not just one. So the new procedure is numerous calls, okay?
Hello? Yeah, you owe 20, 30, 40, 50, 60 million dollars more. Otherwise, you'll go bankrupt and tank the financial system. Have a nice day.
So if a stock goes down and you own half of your equity is you own only half of what you have in equity, the other half is money that you borrowed on margin, you have to put a certain percentage of cash back in, or else you will lose all of your money in that stock. So if you put $100,000 of your money in a stock and you borrowed $100,000, so you have $200,000 in the stock. If things are going up, wow, you're pretty happy. But when things go down, okay, you're going to actually have to inject capital. Could be $40,000, $50,000, $60,000 that money you don't have. Maybe if you can't give them a check for $40,000 to $50,000 or $60,000, they will take the $100,000 you put in and the money they gave you, and you won't have that stock anymore. Okay? You won't have that stock anymore. Well, on a massive scale, that's what took place with Archegos. However, the interesting thing is, they didn't own the stock. They owned a contract called a contract for difference. This is like a derivative in the same sense as the credit default swaps of 2008. This contract for difference, and I'm sure an investment banker listening might say, well, he's not getting it 100% right, but a contract for difference is a contract, a derivatives contract, where you don't own Viacom or you don't own Tesla, but you own a contract on the price volatility up or down, or, the swing up or down. So if you are bullish on a stock, then what you would do is buy a contract for difference and say, okay, I'm betting it's going to go up. I'm betting it's going to go up. And if you make that bet or that, investment using money, half of the money that you put in from your bank or from, cash that you have, and half borrowed on that contract, you don't own the stock. So the SEC, up until very recently, like this month, the SEC and the federal government, they don't know how much you borrowed. So that these are loopholes that they get away with. That's why their balance sheets look better than what the balance sheets truly are. They're not lying. It's a lie by omission, but it's perfectly legal to deceive the government in this manner because it's a loophole. I wouldn't say perfectly legal, but so when the SEC or when the Federal Reserve or when other regulatory bodies say, oh, well, how much risk exposure, how much debt, how many loans are in very risky investments, how many loans did Credit Suisse and other banks give to hedge funds for these hedge funds to engage in risky behavior? We don't know. We don't know the extent of the loans. We don't know how much. Why? Because a lot of the time, since they're not mandated to disclose how much debt they have if they don't own the underlying stock, they can hide their risk exposure and they can hide the fact that they have a lot more debt than you would think. So here's an article on Yahoo Finance, really interesting. And how does this relate to Biden? Well, Biden is asleep at the wheel as always. You think he cares? You think AOC and Bernie Sanders and Biden and the far left socialist communist and, the anarchist and the person who doesn't, who can't stand Wall Street, and you think that they're even looking at this now? You think that they're looking at this now and saying, wait a second, do you know what's about to hit the fan? They're still complaining about wealth inequality without understanding that their ignorance or their lack of interest in how horrible things are because of democratic policies is going to lead to a tremendous stock market crash that will exacerbate the problem of wealth inequality. But that's too much for them to handle, because you can't tweet about it and you can't touch yourself in ecstasy, tubining yourself in front of the world, talking about Medicare for all and wealth inequality and all these things, when the writing's on the wall. The stock market is going to crash either next month, next week, next year. It's going to happen. And when it happens, you'll have financial catastrophes like the Archegos collapse and the GameStop short squeeze. Those were the canaries in the coal mine. We already saw what happened. You have companies that can't stand. You have hedge funds and you have investment firms and banks that cannot stand drastic short-term drops in the market. The only reason they withstood the last market correction or, downturn was because it didn't have anything to do with margin debt being at an all-time high, because margin debt wasn't at an all-time high. In 2020, margin debt wasn't at an all-time high. It is now. So that's the thing. Margin debt wasn't at an all-time high last year. We didn't have inflation last year when Democrats, and it was Democrats that did this. And when the stock market crashes, because it will crash, it will be Democrats that caused this. Why? Why will it be the fault of Democrats? You did not have to end society and prevent people from working. This was not something that you had to do. You deliberately did that, even though countries like Sweden did not and didn't face the economic catastrophe that we did. This was a choice. This was a self-induced choice. This was the brainchild of maniacs that lived their lives based on what CNN and MSNBC and the Washington Post and the New York Times say about Trump, and what they say about the public health crisis. And there's a fabricated consensus of experts. There's a fabricated consensus of experts that they group together to try to deceive the public into thinking that all the authorities and experts and most knowledgeable people on the planet agree with them, when the opposite is true. If voices weren't suppressed and dialogue wasn't suppressed, and if there wasn't this notion of misinformation leading people astray and Russian disinformation, and they're petrified of different viewpoints because they know that their viewpoints don't hold up to scrutiny. So the best way they can impose their will is to just prevent dialogue, debate, discourse, discussion. So they tanked all of society, prevented people from working, prevented people from working for their families, and they caused the inflation. They caused the inflation that we face now because they said, well, we have to give stimulus checks and we have to obviously give unemployment. Well, of course you do. You prevented tens of millions of people from working for a year. And media said, no, it's too early. It's too early. No. It's too early. We can't open up now. No. Gleefully, as they were tubining themselves in front of everybody. And then when they slowly, grudgingly opened up the economy, the jobs were not there for people who had them, because you either had restaurants or companies that went bankrupt. There are restaurants in Southern California that have been around for 30, 40 years. I look and they're no longer there. They're no longer there. And it didn't help any because you had mayors in every major Democratic-run city that were actually finding creative ways to stop house parties. People were still meeting up. And if you stop society from functioning, guess what? You've funneled everyone into Costco, into liquor stores, into grocery stores where they wait in line. Oh, and they're being safe. They're, oh yeah. Well, guess what? They're trying desperately to stock up on toilet paper. And the level of paranoia and fear and trauma, it's unbelievable. Bendy, good is the Bendy, thank you. I think it was Aristotle or Voltaire. I think it was Voltaire that said that. M. Herman, hello. Bendy, thank you so very much. Starting off the super chat. Bendy, thank you. So, you prevented people from working, and you did so because you were so proud of yourself. Democrats were so proud of themselves. This was their time to shine. It was like, this football player running the wrong way, or this like soccer player running the wrong way and scoring a goal into his own net. It was like, and then you hear like Chariots of Fire. Dun, 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 dun. Jerry Nadler, Pelosi, and Biden being, carted towards the goal. Dun, 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 dun. Dun, 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 dun. Dun, 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 dun. And oh my God, they kicked the ball into their own net and they were so happy. And then a year later now they realize, oh, what did we do? Our paranoid, hysterical, completely counterproductive, irrational, maniacal, evil, insane reaction to the public health crisis. Gee, maybe we shouldn't have acted that way. Ben D, thank you. Ebenezer Adams. Decentralized finance crypto transactions via the apps utilizing smart contracts will render their rules moot. Ebenezer, thank you. I think that what they're going to try to do, Ebenezer, that could be the case. I read in my last segment that Biden and his merry band of highly educated imbeciles and failures and buffoons, Ebenezer, what they're going to try to do initially is regulation, and then what they'll try to do is partner in some unholy alliance with really corrupt and, I should say, monstrosities like Facebook and Twitter that are trying to get their own digital currencies out. So, Ebenezer Adams, thank you. Thank you, Ebenezer. Thank you. Decentralized finance crypto transactions. They're going to try their best to blame their own failures on Bitcoin, cryptocurrencies, Republicans, Trump, anything but themselves. Ebenezer, thank you so very much. And so what they're going to do is ignore the fact, or maybe people will start talking about this, but this is an article, Pressure Mounts on Financial Regulators to Address Archegos debacle. So when the market tanks because of structural issues, we didn't have structural issues with the stock market last year. Now we have structural issues because these issues were self-induced. These were self-induced wounds that we did to keep people safe, which in the long run, now, of course, we see, not only didn't work, but are causing every day more chaos and mayhem. Here, regulators in D.C. are starting to feel the pressure to address the fallout from Archegos Capital, the faltering firm that could inflict up to $10 billion in losses on some of the world's largest banks. Why? Because the banks lend them money to make risky trades. And they made the trades on the platforms run by the banks, on the brokerage side of the banking sector. And then, of course, quote, we need transparency and strong oversight to ensure the next hedge fund doesn't take down the economy down with it. Senator Elizabeth Warren. Well, how long have you been Senator Warren? Madam 1032nd. She started off her career as, wow, like pretty amazing. I'll give her that. I wrote about how impressed I was with Elizabeth Warren 5 years ago. 6 years ago. Oh, actually 7 years ago. And now you have it. Now you're just realizing this. We need transparency and a strong oversight. They're not telling you how much debt they have. How even Jerry Nadler can understand this. They're not telling you how much debt they have. They are not telling you how much debt they have. They're hiding the dollar amount. Okay? That's another reason the whole thing's going to tank. Ben D, thank you. Ebenezer, thank you. That's another reason. Senate Banking Committee Chairman Sherrod Brown said in a statement that he expects the Security Exchange Commission and other regulators to take a closer look. Oh, gee, that's really good of you. Bloomberg reported that the SEC and the Financial Industry Regulatory Authority phoned banks on Monday to learn more about the abrupt liquidation of $20 billion in stocks linked to Archegos. They are completely and utterly going to be blindsided. They don't know how much, and you heard it here first. No. Mosquito alert. Lord. Sorry about that. Got my Lysol right here. They don't know how much debt. And Ebenezer, thank you. Ben D, thank you. They don't know how much debt they have. So here, this is a good one I'll read. U.S. put off derivatives rules for a decade before Archegos went under. Okay, so hold on one second. So this is interesting. Rules written in the aftermath of the 2008 financial collapses, FT.com, to limit the potential for a bankruptcy like Archegos Capital have not been fully implemented. Well, isn't that nice to hear? Wow. They have not been fully implemented, throwing the spotlight on regulators in a fiasco that has shocked Wall Street and raised questions on Capitol Hill. Crucial parts of the 2010 Dodd-Frank Act, an 848-page law that was meant to shore up big banks and temper excessive risk-taking in derivatives market, have been delayed again and again. Gee, that's nice to hear. Critics are now arguing that had regulators implemented the rules faster, the implosion of Bill Wang's office and the multi-billion-dollar losses it caused to banks could have been limited. In particular, rules that would have governed the disclosure of Archegos derivative trades are still not enforced, and neither are requirements for players like Archegos to post initial margin payments meant to cover potential trading losses. Wang was able to place bets of more than $50 billion on the share prices of just a handful of companies. Wow. And could not pay his counterparties when they started going against him. Wow. Margin requirements were delayed. The SEC also had not implemented rules on margin requirements for derivative trades conducted away from the exchanges and clearinghouses, which would affect broker-dealers it regulates. Well, that's really interesting. Wow, that's really nice of them to not implement the rules. I mean, why would they? We only had a financial collapse of biblical proportions. Wow. That's interesting. So they haven't even implemented the rules that they had passed. Wow. The rules that they had decided upon in 2010. They didn't even implement the rules that they had decided upon in 2010. Unbelievable. Unbelievable. I mean, this is truly, truly unbelievable. So when you read the reports on, oh, well, you know, everything's fine, it's like, no, everything's not fine. Unbelievable. Archegos, the hedge fund, was able to place $50 billion in bets on just a few stocks. And so the SEC rules are finally come into play November 1st of this year. 11 years after they were 11 years after they were written. That's fantastic. What could go wrong? So, what could go wrong? Truly unbelievable. So, I mean, there you have it. U.S. put off derivative rules for a decade before Archegos Capital went under. So they put off this. They put all of this off for an entire decade, and it's like Biden is clueless. These are the people that pride themselves on regulations. These are the people that pride themselves. You understand? That's who they are. That's who they are. Bloomberg oversight questions. Archegos did so by entering into derivative transactions with banks that gave him exposure to companies without buying actual shares. He also maximized his wagers by borrowing significant amounts of money from his brokers, increasing risks to banks. Among stocks sold starting... the episode has rekindled fears of earlier hedge fund failures that poked holes in lenders' balance sheets. Still, the industry is arguably much better equipped to handle such meltdowns because the rules implemented after the '08. Like, well, really? You had just one. Oh, you had one investment, you had one hedge fund that went under, and they're like better equipped now. Okay. Oh, Jen Psaki told reporters that Biden's administration was monitoring the situation, which means that things are going to get worse. So things will get a lot worse. You better believe that. And it's like, Yahoo Finance. Although Nomura disclosed it could have been impacted as much as $2 billion, Credit Suisse has yet to quantify the hit it expects to take. Well, that was $4 plus billion. JP Morgan's global investment bank team now projects industry-wide losses in the range of 5 to 10 billion. It was 10 billion. Significantly more than its initial estimate of 2.5 to 5 billion. We're still puzzled why Credit Suisse and Nomura have been unable to unwind all their positions at this point, JP Morgan tweeted. Wrote. So you look at this and it's like, what do you think's going to happen? What do you think's going to happen when the you-know-what hits the fan? So, like, what do you think's going to happen when the you-know-what hits the fan? Kevin! Lundaverde, Kevin, thank you. 46 don't got it. No, he don't got it. He don't got it. Larry, Tube and Tax. Tube and Tax. Come on, man. Hey, don't tube in yourself, man. Come on. Kevin, thank you so very much. Kevin, thank you to my super chat. Thank you. Kevin, thank you. Larry, thank you. So, let's see. So they don't know how much debt. They have no clue how much debt people have. Banks have. They don't know how much risk. When they're evaluating the risk of these banks, they don't have the correct evaluation because they don't know how many loans these banks have given hedge funds to make risky bets or risky investments, because the investments are for derivatives contracts where the hedge fund doesn't own the underlying stock. And if you don't own the underlying stock, you can get away with not telling the SEC how much you have on margin or debt. So it's like, does Bitcoin's recent flash crash mean Warren Buffett is right to dislike crypto? Let's read this. Yahoo Finance. The past month has been bumpy for Bitcoin after a bully first quarter of 2021 led to an all-time peak of $63,000 per unit. The world's leading digital currency now hovers around $45,000, thanks in large part to Tuesday's flash crash of roughly 15%. Holdout investors who only a couple weeks ago may have thought they'd missed an opportunity of a lifetime are now sighing with relief. Meanwhile, those who bought in at the peak are trying not to think about their losses. And what about Warren Buffett, the world's most famous investor, says to those who might be thinking of buying Bitcoin at a bargain price, it's probably rat poison squared, Buffett once said. Okay. He doesn't like digital currency. So Warren Buffett does not like. There's a difference between he might be right because it might be the wave of the future. That's true. Yes, the banks are in on this too. The banks are enabling this to happen because they're giving money to hedge funds when they know the hedge funds are at risk. And then when the hedge funds don't pay them back, the banks stand to lose tens of billions. The hedge funds will just go bankrupt. Okay? It's the banks that could possibly get bailed out. So, while Buffett chose not to comment on cryptocurrency during his company Berkshire Hathaway annual shareholders meeting, the Berkshire's vice president, Charlie Munger, pulled no punches on the subject. Quote, I don't welcome a currency that's so useful to people who commit illegal activity. Munger said the whole dang development is disgusting and contrary to the interests of civilization. So he has a different viewpoint. Not to be outdone, Buffett has made his share of extremely cutting remarks about Bitcoin. I don't have Bitcoin. I don't own any cryptocurrency. I never will, he told CNBC in 2020. Here are the reasons. It has no unique value at all. This is according to Warren Buffett. I'm not saying that these are necessarily my thoughts, although I do agree with him to a great extent. I think that two things are true. One, it is the wave of the future, I just don't know how it's going to evolve. Because you have Biden's administration, you have the regulators who are slow to regulate everything, and they're going to allow this financial collapse, and they'll probably try their best to blame everybody from Trump and Bitcoin. When it will really be their lack of oversight and their inability to actually implement laws that they passed. The billionaire investor doesn't like Bitcoin because he considers it an unproductive asset. Buffett has a well-known preference for stocks of corporations whose value and cash flow come from producing things, but cryptocurrencies don't have real value, Buffett said in a CNBC interview in 2020. Quote, they don't produce, they can't mail you a check, they can't do anything, and what you hope is that somebody else comes along and pays you more for them later on, but then that person's got the problem. Cody, I hope all is well. Cody, normally when they are bashing crypto, they are secretly buying. That's true in many cases. That's true. Cody, thank you. Yeah, I agree with you on that. I think that there is a tremendous philosophical foundation to cryptocurrency, and I think it's very, very interesting, and there's definitely a solid philosophical foundation. I worry that you're going to have people like Facebook and Twitter and the U.S. government and I think that if, God forbid, or when, heaven forbid, the stock market crash does happen, I think Bitcoin's going to go down like every investment, but I think that cryptocurrencies will probably go down a great deal. But I agree with you. A lot of times when people are bashing something, they're often secretly buying. Cody, thank you as always. Thank you, Cody. Thank you so very much, Cody. Thank you. As always, for always your support. Thank you. Kevin! Thank you, Cody, again. Kevin! 46's name is not allowed when paired with negativity, apparently. Exactly. Well, that's the thing. Kevin, they know that the time is coming when a House, you'll have Trump Republicans. Look, 4 years is not enough time. Kevin and Cody and everybody here, 4 years is just not enough time to wrestle control away from an establishment that's had a stranglehold on, this country for a long time. So, Kevin, thank you so very, very much. They have to silence discourse, debate, discussion. They have to. They have to do so. That's their thing. That's how they're able to push their viewpoint. Biden doesn't think crypto counts as money. As a tradable asset, Bitcoin boomed, but does it meet the three criteria of money? According to the most common definition, money is supposed to be a means of exchange, a store of value, and a unit of account. But Buffett calls it a mirage. Quote, it does not meet the test of currency, the billionaire said on CNBC in 2014. I know there are people who disagree here. I'm just reading, just because I find it interesting. I'm not necessarily agreeing with him, although he makes some pretty good points. It is not a durable means of exchange. It is not a store of value. He adds that it's a very effective way of anonymously transmitting money, but, well, not anymore so much with the new rules. A check is a way of transmitting money, too. Are checks worth a whole lot of money because they can transmit money? Then 3, like you said, Cody, he doesn't understand it. So that's, I think, what the big thing is. Buffett became one of the most successful investors in history by sticking with stocks he understands. So I get in enough trouble with things I think I know something about. Why in the world should I take a long position or short position on something I don't know anything about? But people like to gamble, he told CNBC after a 2018 Berkshire Hathaway annual meeting, which is another problem with non-productive assets. If you don't understand it, you get much more excited than if you understand it. You can have anything you want if you imagine, if you just look away, if you look at something and say, that's magic. So, Forbes, serious Bitcoin collapse alert issued after $300 billion crypto price. Hold on. Why is this? Oh, I can't stand this. I can't stand this. These ads. Okay. Like, I don't mind ads, but not like they pop up throughout the screen. Serious Bitcoin collapse alert issued after $300 billion crypto price crash sends Ethereum, Cardano, BNB, Solana, XRP, and Dogecoin sharply lower. This is September 10th. Forbes. The Bitcoin price has lost around 10% over the past week, with Ethereum, Cardano, Binance's BNB, Ripple's XRP, and the meme-based Dogecoin recording even sharper falls, even as the country of El Salvador formally adopted Bitcoin as legal tender, and banking giant Standard Chartered predicted the Bitcoin and Ethereum price could be about to increase tremendously. Now, two high-profile central banks have warned Bitcoin and other cryptocurrencies at risk of collapsing and are not, quote, a good safeguard of value. Quote, private money usually collapses sooner or later. And sure, you can get rich by trading in Bitcoin, but it's comparable to trading in stamps. Oh, I'm not saying this. This is the article in Forbes. I'm not saying this. Okay? This is not my viewpoint necessarily. I'm just reading because these are interesting articles. But I do think it's going to crash. I think that everything's going to crash. I mean, not everything, but I think stocks, cryptocurrency, I think the stock market is going to crash. I think banks are going to lose billions upon billions. Hedge funds will go under. And even banks might have to be bailed out because they gave so much money to the hedge funds. Meanwhile, Bank of Mexico Governor Alejandro Diaz de Leon said Bitcoin is more like a means of barter than evolved fiat money, calling it a high-risk investment and a poor store of value due to its wild price swings. The Bitcoin price... See, well, okay, now this is the beginning. We're like basically in, the top of the first inning when it comes to, digital currency. So, what cryptocurrency is now will not be what it is 20 years from now. I understand that. The Bitcoin price has added a massive 350% over the last 12 months, but investors have needed strong stomachs. Bitcoin on Tuesday alone dropped by almost 20% before rebounding. Combined, the entire cryptocurrency market has surged around 170 points since January, with much of that coming from rises in Ethereum, Cardano, Solana, BNB, XRP, and Dogecoin. Whoever receives Bitcoin in exchange for a good or service, we believe that is more akin to bartering because that person is exchanging good for a good, but not really money for a good. Reuters quoted Diaz de Leon as saying, with his comment pouring cold water on suggestions Mexico could follow El Salvador in adopting Bitcoin as an official currency. People will not want their purchasing power, their salary to go up or down 10% from one day to another. You don't want that volatility for purchasing power in that sense. Well, it's true, but you don't. But also our inflation. We're going to have a tremendous problem with inflation because of Democrats and their policies. So we will have a tremendous problem in terms of inflation. Kevin, Cody, thank you. Larry, thank you. I mean, give me your thoughts. You think Warren Buffett is wrong? I think he's probably right in the short term. The problem now, ladies and gentlemen, is that we have all the economic indicators that AOC and Bernie Sanders and people on Twitter on the left, and also obviously the Never Trump conservatives, like it's not good to be doom and gloom always, just for the sake of being, worrying about a collapse always. But if you look at every single economic indicator, from GDP being revised downwards to inflation being at a high not seen in a long time. Let's see, inflation, when was the last time inflation was 5%? So 5.4%. It's the highest inflation rate since 2008. We have the highest inflation rate since 2008. Inflation is the worst thing that you can have in an economy. One of the worst things that you can have. Because the value of the dollar goes down while prices go up. So you're working just as hard, but you're able to buy less, and prices keep going up. That's how corporate profits have fueled this fake and phony rise in the market. I mean, everyone who follows it says something's happening, but I'm predicting a crash that is going to be, God forbid, devastating. That's why I say to everybody, save your money. Put it in your savings account as much money as you can every month, every week. Yeah, sure. Go have dinner with your significant other. Enjoy your life, but as much as you can, save. Inflation is at a 13-year high. It is the worst thing. The worst thing that you can have is inflation. And Democrats forced this upon us by preventing people from working for a year, and then pumping money, artificially just pumping money. Like, we didn't really have a financial collapse. It was self-induced. We had a social collapse. We had a collapse in logic and reason. That's why everything is linked to an extreme viewpoint or misinformation. They want a monopoly of thought. They don't want diversity of thought. They want one viewpoint, their own viewpoint, which always proves to be wrong. And it's like, you have inflation at a high we haven't seen since 2008. So there are people who say, well, the market, corrected itself last year. We had a downturn in the market. It's like, well, we didn't have all the economic indicators with so many that are negative like we do now. The interesting thing is, what is going to happen when, God forbid, the you-know-what hits the fan? You already, and I keep talking about this, but you already pumped money into the country, printed money, pumped it in with the stimulus checks. You already did that. So you bailed out banks in 2008, and you had to pump money into the economy because you prevented people from working. It wasn't the pandemic. The microscopic organism doesn't decide on anything, okay? They decided to pump money they decided to prevent people from working, and in doing so, you had to give unemployment. Okay, you had to give unemployment, obviously, and then you had to, help people survive because you didn't allow them to do so. So now the issue is, oh, and by the way, whenever you see because they're spamming all the comment section whenever you talk about crypto. Ian Moyer! Ian! Cody, thank you, Ian! Kevin, thank you, Ian Moyer, thank you! Did you see that video of Potato Whisperer complaining about all the potato flame? No, I didn't. No, oh, yes. He said it's not a Trump rally or something like that. Yeah, I did. Yes. Ian Moyer, thank you so very much, Ian. Exactly, Robert. Exactly. Your life is all it's true. Ian Moyer, thank you. Cody, Ian, everybody here. Kevin, thank you. Ian, as always, thank you so much. As always, thank you so much. Yeah, I did see that. He's like, yeah, man, it was not a Trump rally, man. It's not a Trump rally, man. Come on now, man. Trump rally, man. You have inflation. And then you have the biggest jobs miss on record of 700,000 jobs that we should have had. Ian, thank you so very much, as always. Thank you, Ian. So you have inflation at a high not seen since 2008. What happens when corporate profits start dwindling? Because up until recently, the reason that they made so much money is they were able to pass the cost of the high cost of doing business with the producer price index and supply chain problems and labor shortages. They were able to just increase the price of their goods and services, which people, interestingly enough, decided to just, accept. What happens when the corporate profits start dwindling and all the economic indicators remain in a horrible place? GDP is revised downwards. Inflation is at a 13-year high. The consumer price index is at a 10-year high, something like that. The producer price index is at a 10-year high. Consumer confidence is low. Margin debt is at an all-time high. And it's at a percentage of GDP that's similar to the points right before market crashes. So tell everybody you know that H.A. Goodman is telling you, save money. What's the worst that can happen? I mean, there's no downside to saving money. You could say, well, you're not going to make money. It's like, well, don't worry about that right now. I don't think, now is not the time to worry about making money in any market. The bond market, the stock market, crypto. Now is the time to just make sure you have liquidity. Make sure that you can access money, God forbid, if you need it for a rainy day. Because Bumbling Blinken and Jake the Snake Sullivan. No, I love Jake the Snake, so I'm not going to even. Jake Sullivan and mashed potato brains. There's no limit. Remember, the no limit soldiers? There's no limit. There's no limit to how bad things could get. And I think that a nuclear confrontation is on the table after the stock market collapse. I just think every possible thing that you could think of, in terms of every possible thing that you could think of in terms of like an unforeseen catastrophe could take place. Because you have to understand, Biden, mashed potato, and his merry band of very highly educated, extremely polished buffoons and imbeciles, they don't have a vision. Like, they don't have, like, if you ask them, well, what's your policy towards China? Like, what do you want to accomplish? Man, come on, man. Where do you want to see the economy in a year? Because you're tubeting yourself on climate change and social issues, and where do you want to see us? What GDP do you want to reach? I mean, Trump was always talking about, like, GDP. Oh, we're going to reach this number, 3.5 or 4% GDP or whatever. 3% GDP. He was talking, like, Trump he had goals and a vision, and he was a great president in terms of accomplishments. The media meltdown was what took down, the media meltdown, okay? So Trump was always talking about 4% GDP. The media meltdown was what got President Trump. Not him and they were calling him a despot. I mean, look, times were good. We didn't have Americans stuck in Afghanistan. We didn't have an impending stock market crash. Times were good. The worst thing, that happened was, Trump pressured Zelensky, and it was like, oh my God. U.S. growth hits 4.1%, fastest since 2014, July 27th. I mean, we had a great economy, 2018. We had a great economy. And they just completely melted down. Now, anything is possible. You understand? Like, anything is possible. Anything is possible with mashed potato brains. Like, at any point, things could get much worse. Much worse. We don't have, this is also the problem. We have been through so much as a society. Like, morally superior liberals, they went through an agonizing battle for 4 years trying to come to terms with the fact that Trump didn't care what they thought about, like what they thought about him. Every day was like this horrendous experience because their president was somebody they despised. And so everything was just this childish, sensationalized, apoplectic response to anything Trump did. They got themselves into this hysterical, irrational, unhealthy, like, they fomented such hysteria that lifelong friends they disowned. It consumed who they were as people. It broke their wills and their spirits and infected their souls. And it was all because they didn't like Trump's personality. That's really what it comes down to. His policies, President Obama had more draconian policies. When you look at his policies in comparison to Biden and President Obama, nothing. Like the destruction of Libya and leaving Americans in Afghanistan along with $28 to $60 billion in weaponry. The main thing is leaving American citizens. How can you leave any American behind? That's against what we stand for as a country. But then there you go. Mashed potato brains doesn't care. It's all about public relations. But the worst point in Trump's tenure was what? Not the Helsinki conference? Like what? There were some policies that I opposed, yeah. But he fixed those policies. And President Obama had worse policies pertaining to that topic. A Senate report that I can't even read on YouTube. So Trump's worst day is nothing compared to Biden's worst day, which was Afghanistan. And we're heading towards a catastrophe in terms of the stock market. Ian, thank you very much. Voice of reason. Voice of reason. Mashed potato brains is becoming strangely cruel and authoritative with the crypto and mandates. Exactly. Well, this is the thing. Irma, thank you. Voice of reason. It's his last. It's the Democrats' last chance to impose their will. They know that they're not going to have Congress, and they might not even have. Irma, thank you. A voice of reason, thank you so very much. Voice of reason, they know they're not going to have Congress next year. They know that. They're not going to have the House. They might not have the Senate. Trump is building in popularity, is gaining in popularity every single day. Trump Republicans are gaining political power every single day. Never Trumpers are losing influence every single day. So now is the time to impose as many of their insane policies as possible. They're trying to take the initiative, and half the country is either yawning or just doesn't care, doesn't take, not listening to them or actively, opposing. What Ben Shapiro is doing at the Daily Wire is very good. You can't impose an it's blatantly unconstitutional. I mean, it's blatantly unconstitutional. Whether or not it saves people's lives, you can, older people for sure. It'll save their lives. Yeah, who have pre-existing conditions, especially. But you can't mandate, or you can't impose, you can't force anyone to do anything with their bodies. And they say, well, when we went to school, but look at the difference. Look at the FDA let's just say, updates between, I don't even want to get into it. There's so many differences, it's unbelievable, okay? You cannot save society from something that continually changes yearly or within a year. Okay? So, Eric, hello. Voice of reason. Now is the time for them. It's a power grab. They know, this is like a wounded animal trapped in a corner. They know, look, they know that the time that they have to impose their will upon society is limited. And when you think about it, when they had Paul Ryan and Richard Burr at the Senate Intelligence, they have Mitch McConnell. They know that. Oh, baby, hey, don't add me that mix of deviants and unscrupulous people. How dare you impugn the good name of Mr. McConnell? A voice of reason. Thank you. How dare you disparage the good name of Mitchell McConnell by trying to lump me together with Paul Ryan of all people? How dare you assail the name of Mitch McConnell? I am so different from that youngster Paul Ryan. Well, he kind of is not that different. You don't have, look, from 2015 till today, you had Trump, you have Trump Republicans, you have Democrats and never Trumpers and media and Hollywood and social media that join together. The latter is losing. The latter are losing influence daily. They know this. You don't think they know this? You don't think they realize that they're losing a voice of reason? Great point, as always. But they're losing influence. We've lost prestige globally within the span of a couple of months. I mean, it's on everyone knows. See, before Afghanistan and the catastrophe and disaster, 13 American lives lost, 200 Afghans lost. For what? Because of Biden's mismanagement? He could have started evacuating in January, February, March, April. He didn't have to wait until the last minute. And before, when he was like, hey, man, come on, man. And, my lotion, I use Formula 405, 415 on my legs. And the leg hairs, and cornflakes, and Count Chocula. All right, thank you. Can I go now? Can I go? Am I allowed to speak? Am I allowed to speak? Am I allowed to speak? Can I speak? That whole thing was like, people were like, oh, isn't that interesting? He's slurring his speech again. We'll just overlook that because it's not Trump. Soon it's going to be, the ICBMs are above, and it's about to be global warming, baby. We're going to have some global warming. It's a little bit different, though. I don't think Tesla can help you out with this one. Game over, man. Game over. Like Aliens 2. Do you understand? I mean, I keep saying this, and I don't know if people get it, but do you understand? The ICBMs could be flying above. If this far-left socialist was listening, what is the ICBM? Anyway, this guy's so lame. The ICBMs could be right above us. We could be bartering family jewels for, toilet paper. We could be evicted. A homeless person could, go to the bathroom on our car right as we're driving it. And the windshield wipers, with the stuff, I mean, and they would still say, at least it's not Trump. At least we don't have Trump. The stock market could crash. Whatever retirement you had, God forbid, will be worth, the price of one Tic Tac. And you look and and then they'll say, at least we don't have Trump's tweets. At least we have somebody empathetic in the White House. Everything is viewed from that perspective. Everything is viewed from that perspective. Every single thing, ladies and gentlemen, is viewed from the perspective of, at least it's not Trump. So you got to understand, when there's a market crash, and there will be, okay? There will be a market crash. I hope I'm wrong, but unfortunately, there will be a market crash. You're looking at you're looking at a world where it doesn't matter how bad it gets. Media and Democrats and social media, the algorithms, everything is still going to be linked. Is still going to be geared towards, at least it's not Trump. And it's like, it's like, I'm actually switching up the title of this a bit. you have to understand, they don't see things. There is no point where Democrats will say, my God, what have we done? They're not going to say, my God, us shutting down society, preventing tens of millions from working, this is a horrible thing. They're not going to say that. They're not going to say that. Like, they're not going to look at that. They're not going to say that, and they're not going to, like, understand, like, with Afghanistan, they have stopped reporting on it. So they have simply stopped reporting on it. We have Americans still there. They have not reported on the tens of billions in weaponry we left. It is not on their radar anymore. Do you understand? It is not on their radar anymore. Okay? And when the stock market crashes, who knows? Like, they won't be able, they'll try their best. They'll try their best to turn the page. The stock market collapse continues on day 10 of drastically a sharp decline in prices. Hedge funds are going under, and even there's talk of bank bailouts. But Biden visited a zoo today. Cheryl, tell us about Biden's visit. Well, Bob, Biden was at the zoo today, and let's hear his remarks. Hey, man, elephant man. Hey, it was good. You know what? These animals know how to really be happy, man. Stock prices, stop selling, man. Cornflake says stop. Stop the paranoia. Hey, can I still speak now? I'm at the zoo. Can you give me a couple of minutes to speak, man? Okay, I was told I have to go, man. I gotta go now. Stop selling. Stop selling stocks. Mean people, bad people. You're like Trump. It's like a Trump rally in the market. And then back to you. Back to you. 15 Joey! 15 days to crash. It was 15 days to crash the market. And it'll be like, that was 15 days ago, man. Gosh. It was 15 days ago, man. Jeez. This is 15 days. Relax. 15 days. All right, ladies and gentlemen, thank you so very much. To my super chat, thank you so very much. I am going to do an upload. Right now. So, to my viewers, 200 plus, please go ahead. Irma, thank you so very much. Irma's the only one here who likes my comedy. Irma, I love you. Thank you. Be here, ladies and gentlemen. Check this channel in 10 minutes, people. 10 minutes. Okay, 10, 15 minutes, okay? Hit subscribe. I will do a segment on this right now. The cryptocurrency crash will just mirror the stock market crash. And they'll probably blame digital currency crypto for their problems and issues. Give me your thoughts below. Hit subscribe right now. Thanks, Eric and Luke. Thank you. To my super chat, Ian, Cody, everyone, Kevin, everybody here, thank you so very much. Check the channel in 15 minutes, everybody. Thanks, everybody. Have a great evening.